What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be doing a post-trade setup review on a video that I posted on my YouTube channel a little over 2 months ago. And that's this video right here, titled, I found a 7-to-1 risk reward in Snowflake. So we're going to be looking at Snowflake and see how this trade setup played out a couple months after the video was posted. So the game plan in this particular video, if you watch this video, I describe how the game plan was to wait for a pullback and to place a buy limit order at 198.78, a protective stop just below 194, and a target just in front of 229.54. Okay, so that was the game plan. Let's go see how that trade played out. There's several different lessons we can learn from this. So first of all, this is what the chart looked at like on 15-minute candles. And why I chose that particular chart to do that video was Snowflake had gapped up that particular day and had continued higher, forming a couple short-term support levels to consider for a quick bounce trade. Okay, so our game plan was to do this. It was to, once again, this black arrow line here was my forecast of the ideal way price would continue after posting that video. Okay, and this is what happened. Price, that the black line once again was the line that I was projecting. And right away, the very next morning, price gapped down and you would have got filled at 198.78. So you would have been filled almost immediately the very next day from that video. Now I'm going to change the time frame to hourly candles because this trade takes a little bit longer to play out. So this game plan, this arrow I draw is not time specific. So this was a pretty steep ascent. If it were to take longer than that, that'd be just fine. Just let the trade play out. And that's actually what happened here. Was it didn't follow the black line exactly. So I'll change the time frame to hourly candles, and you'll notice that my projection was for the end. So we had the entry. The target was still just in front of 229.54, but we took off and we took our good time here. So this played out. This was basically wiggling sideways to higher for weeks. For several weeks, it just meandered sideways. So after getting filled, you had to be patient. Now this red dash line was the protective stop. So we didn't get anywhere near that protective stop while all this was happening. So you just had to be patient and go on to do something else and just let this one play out. So as it continues to play out, this is the way it continued to play out. It started making further upward progress. And at this point here, so this is a little over a month later, you would have been sitting on about a 26-point profit. So you might have at that point said, well, that's only 3 more points. That's only 5 more points to target. You could have taken a partial off there, or you could have got out completely, or you could have just said, all right, I'm going to wait for it to get to the target. And then it would have been a little frustrating because it continued going sideways and it didn't get to the target then. And then we had a big drop, giving up a bunch of the gains. So that's the test point. It's like, how bad do you want to stay in that trade? Still nowhere near the protective stop, but you'd given up about half of your gains over the course of about a week or so. So that could have been a test point. You might have taken yourself out of the position at that point for a small gain, and that's just fine. Okay, but this continued to play out, and then we gapped up on July 31st. So the last day of July, gapped up, and that would have been a fill. So if your target was just in front of the 229.54, you would have exited the position for a little over a 30-point gain. Okay, so the risk was only 198 to 194. So it's 4 points of risk, and that would have been a little over a 30-point gain, taking only 4 points of risk. So you would have achieved a 7-to-1 reward with only a few points risk. So that would have been a very, very nice trade if you would have held patiently and exited there. And if you didn't exit there, however, so why was my target right at 229.54? The target was at 229.54. It's because that's where the first resistance level was, which I described in this video here. So that level there I drew that level because of this structure here, which is a formation that shows resistance. Okay, that wasn't just randomly chosen. That target, that was a clue in the chart that gave me the price target. Okay, so we would have been out of that position just in front of 229.54, which would have been a good thing, because just a few days later, gap down, and then today we dropped another 14 points. Okay, so if you hadn't exited that position at that target, you would have given all the gains back. But if you had followed the process from this video, if you literally just said, okay, if you literally followed, they weren't instructions, but that was a trade setup. If you followed that particular trade setup, that would have been a little over a 30-point gain. So what I'm going to be doing going forward, folks, is I'm going to be doing more trade setup videos and occasionally sprinkle on some of these review videos so you can learn more insights into the entries and to the exits and to general trade management.